Today we're diving into some insights from 𝗗𝗟𝗧, Head of Research and Chief Investment Officer at Fundstrat Capital. On CNBC's Closing Bell, he made a bold statement that's shaking up how investors are thinking about the market. 𝗗𝗟𝗧 said, "Crypto is no longer leading the market, AI is," and highlighted just how resilient the market has been despite all the shocks we've seen this year. I'm going to show you the clip of 𝗗𝗟𝗧 on the show, and right after that, I'll break down my own reaction to what he said. Then, we'll go even deeper and take a look at 3 AI stocks with serious long-term growth potential that every investor should be aware of. If you're only going to watch one video today, make sure it's this one, and watch all the way to the end. Hit that like button, let's get 1,000 likes on this video, share it, and drop your thoughts in the comments. Make sure you're subscribed so you don't miss any of the next big financial and investing updates. Now let's hear what 𝗗𝗟𝗧 has to say.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes, I mean, we're almost through this year. And
Yeah.
I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever, and that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again.
Yeah.
But it's a replay of this year. And maybe we've now had 3 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period.
Now, you mentioned, obviously, the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about, was Bitcoin can't stop going down, the NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. And it led to what they call auto-deleveraging.
You've definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Yeah. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
𝗗𝗟𝗧 started off by pointing out that earnings visibility is going to be strong next year, and he doesn't see any immediate concerns about earnings peaking. His focus is really on whether stocks are priced correctly right now. He mentioned the S&P potentially reaching 7,000, but noted that this would only represent a modest gain of around 2.5% from current levels. He also reminded us that predictions for hitting 7,000 earlier this year didn't materialize, largely due to unexpected shocks that hit the market. He explained that last year felt like compressing 5 years of market history into just one because we experienced a major bear market along with unprecedented tariff hikes. That combination of factors really derailed earlier expectations, but what was remarkable, according to Lee, is that stocks went through a waterfall decline and then recovered every single point of that drop symmetrically. He emphasized that this demonstrated incredible market resilience. Looking ahead, Lee suggested that next year might feel very similar in terms of volatility. He warned that policy shocks, whether monetary or administrative, could trigger another significant market drawdown of around 20%. He framed it as a sort of replay of what we've experienced over the past 5 years, noting that having multiple bear markets in such a short period is unusual and compresses a lot of history into a short time frame. The conversation then shifted to the Fed and how uncertainty around its path has contributed to recent pullbacks. Lee acknowledged that policy flux has been a factor, and he also discussed the role that crypto had played in market sentiment. He explained that for most of the last 5 years, crypto has often been a leading indicator for risk appetite in the market. But on October 10th, crypto experienced what he described as an Armageddon event. A flash crash triggered massive liquidations that wiped out nearly 2 million accounts, and about a third of market makers went out of business in a single day. Lee pointed out that this wasn't a result of broader market weakness, but rather a pricing error or glitch that caused auto liquidations on highly leveraged accounts. He made it clear that this event illustrates just how sensitive crypto markets are to leverage and risk appetite. When leverage gets wiped out, the market reacts violently. He compared it to the 2022 crypto event, noting that it took 8 weeks for investors to start cautiously returning to the market. While crypto has been historically a leading indicator, Lee argued that right now it is lagging. He believes artificial intelligence and developments in that sector will be the driving forces leading the market moving forward, not crypto. Finally, the discussion touched on Bitcoin's future price trajectory. Despite the recent crash, Lee maintains that it is still very likely for Bitcoin to surpass $100,000 before the end of the year. However, he clarified that the timeline for that is influenced by market sentiment, leverage, and the shift toward other leading factors like AI, which are capturing investor attention. Overall, what Tom Lee is emphasizing is that the market has shown extraordinary resilience in the face of shocks, but investors need to be prepared for volatility and potential policy-driven corrections. Crypto has proven to be an excellent measure of risk appetite, but it is no longer the main driver of market momentum. Instead, sectors like AI are increasingly taking the lead, while Bitcoin still has the potential for significant upside despite recent turbulence. So if you're thinking about your investment strategy, Lee's insights suggest a mix of cautious optimism with an eye on potential shocks and a focus on where the leading market drivers are heading. The key takeaway is that the market can recover from severe corrections, but understanding the triggers and watching emerging sectors like AI will be critical for anyone looking to navigate the next year successfully. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's dive into the 3 AI stocks with long-term growth potential. First up, let's talk about the bedrock of the global semiconductor industry, Taiwan Semiconductor Manufacturing Company, better known as TSMC, ticker symbol TSM. This company is not just a leader in its field, it's the silent force behind nearly every major technological breakthrough you see today. You won't see their logo on your phone, your laptop, or your smart home devices, but TSM's chips are the invisible engines powering everything from iPhones and gaming consoles to the world's most advanced AI data centers. Their technology is woven into the fabric of our digital lives, often without us even realizing it. TSMC is the world's leading pure-play foundry, which means they focus solely on manufacturing chips for other companies. Tech giants like Apple, Nvidia, AMD, and Qualcomm all rely on TSMC to bring their most advanced products to life. Without TSMC, many of the devices and services we depend on simply wouldn't exist. Their unmatched expertise in advanced chip manufacturing, down to 2 and 3 nanometer nodes, puts them years ahead of most competitors. This level of precision is essential for next-generation AI hardware, where every nanometer can mean a leap in performance and efficiency. TSMC's ability to consistently deliver at the cutting edge makes them indispensable to the future of technology. As demand for AI and high-performance computing explodes, TSMC's state-of-the-art manufacturing capabilities are more sought after than ever. This surge in demand gives them incredible pricing power and allows them to choose the best customers and projects, further strengthening their position in the industry. Of course, there are real geopolitical risks given TSMC's roots in Taiwan, a region often in the global spotlight. But TSMC is proactively reducing this risk by building new fabrication plants, known as fabs, in Arizona, Japan, and Germany. This global expansion not only diversifies their manufacturing footprint, but also reassures customers and investors that TSMC can weather regional uncertainties. Financially, TSMC is a powerhouse. They generate massive free cash flow, pay out strong and reliable dividends, and maintain a fortress-like balance sheet. Their financial discipline means they can invest heavily in research and development, while still rewarding shareholders. TSMC's growth is directly tied to the most innovative and fastest-growing sectors: artificial intelligence, smartphones, autonomous vehicles, and more. Their long-term contracts with industry leaders provide revenue stability, even as technology cycles shift and evolve. Their relentless investment in R&D creates a powerful feedback loop. Better technology attracts more customers, which in turn funds even more innovation. This virtuous cycle keeps TSMC at the forefront of the industry, always pushing the boundaries of what's possible. Despite their critical role in the global tech ecosystem, TSMC often trades at a valuation that's surprisingly reasonable. For investors, this means you get exposure to the entire AI industry's growth without paying a sky-high premium. Looking ahead, every new wave of technology, whether it's the Internet of Things, quantum computing, or ever-smarter devices, will need TSMC's chips at their core. Their technology is the foundation upon which future innovations will be built. TSMC's reach goes far beyond just consumer electronics. Their chips are found in everything from cars and medical devices to industrial robots and cloud infrastructure. This diversification across industries adds a layer of stability, making them resilient even if one sector faces a slowdown. TSMC's management team has a proven track record of navigating complex supply chains, adapting to industry cycles, and making strategic decisions that keep the company ahead of the curve. Their leadership is a key reason for TSMC's sustained success. Their competitive moat is enormous. No other company can match TSMC's scale, technological prowess, or reputation for reliability. This makes them the go-to partner for the world's most demanding tech companies. Investing in TSMC means owning a piece of the very foundation of the AI revolution. As artificial intelligence becomes more integrated into every aspect of our lives, TSMC's importance will only grow. While competitors like Intel and Samsung are investing heavily to catch up, TSMC's relentless pace of innovation and execution keeps widening the gap. Their lead isn't just about technology, it's about trust, scale, and a proven ability to deliver. TSMC is the silent giant powering every major tech advance, from the devices in your pocket to the supercomputers driving scientific discovery. Their influence is everywhere, even if you never see their name. With a market cap of about $1.5 trillion, the company reported earnings per share of 9.62 in 2024. Its price-to-earnings ratio stands at 30.14. In terms of scale, Taiwan Semiconductor's revenue in 2024 reached 2.89 trillion new Taiwan dollars, and its net income came in at 1.15 trillion new Taiwan dollars. These numbers highlight the massive scale and profitability behind this firm, showing it remains a global leader in chip manufacturing. For investors, TSMC is the ultimate foundational play for AI, offering lower risk, high potential, and a cornerstone position in any tech-focused portfolio. Their stability and growth prospects make them a must-have for anyone serious about the future of technology. Without TSMC, the AI revolution would grind to a halt. The world's most advanced chips simply wouldn't get made, and progress across countless industries would stall. That's why TSMC is my first pick for massive, AI-driven growth. Their unique position at the heart of the tech world makes them an unparalleled investment opportunity. If you want exposure to the entire AI value chain, from hardware to software, from data centers to smart devices, TSMC is non-negotiable. They are the linchpin holding the entire ecosystem together. Let's move to our next AI powerhouse. Transition to next scene. Next, let's talk about one of the most impressive comeback stories in the tech world, Advanced Micro Devices, ticker AMD. Once considered a perennial underdog, AMD has completely transformed its reputation and market position over the past decade, emerging as a true powerhouse in the semiconductor industry. The driving force behind this transformation is CEO Lisa Su. Since taking the helm in 2014, Su has been widely credited with orchestrating AMD's turnaround. Her vision, technical expertise, and relentless focus on innovation have propelled AMD to the forefront of high-performance computing, earning her recognition as one of the most influential leaders in tech. Today, AMD designs cutting-edge CPUs and GPUs that power a vast array of devices, from the latest gaming consoles and high-end gaming PCs to supercomputers and the massive data centers that drive artificial intelligence. Their chips are at the heart of some of the world's most advanced technology, enabling everything from immersive gaming experiences to complex scientific research and AI breakthroughs. A major leap forward for AMD is the launch of their Instinct MI300 series GPUs. These powerful accelerators are designed to compete head-to-head with NVIDIA's dominant offerings, delivering top-tier performance for AI training and inference. What sets AMD apart is their commitment to a more open software ecosystem, which is increasingly attractive to developers and enterprises looking for flexibility and choice. Central to this strategy is AMD's open-source ROCm platform. Unlike NVIDIA's proprietary CUDA, ROCm gives developers the freedom to innovate and customize, fostering a vibrant community of researchers, engineers, and startups. This open approach is making AMD a serious contender in the rapidly growing AI hardware market as more organizations seek alternatives to closed ecosystems. AMD's strategic acquisition of Xilinx has further expanded its capabilities. Xilinx is a leader in FPGAs, field programmable gate arrays, which are highly customizable chips ideal for AI inference, networking, and specialized workloads. By integrating Xilinx technology, AMD now offers a broader, more robust portfolio for customers building next-generation AI infrastructure. Another key pillar of AMD's growth is their EPYC server CPUs. These processors are rapidly gaining market share from Intel, thanks to their superior performance, energy efficiency, and scalability. EPYC chips are now the backbone of many AI servers and cloud platforms worldwide, helping AMD carve out a significant presence in the data center market. This multi-pronged approach, offering GPUs, FPGAs, and CPUs, means AMD is positioned to profit from every layer of the AI infrastructure stack. Whether it's training massive AI models, running inference at the edge, or powering the servers that keep the digital world running, AMD has a solution for every need. Financially, AMD's turnaround is nothing short of remarkable. The company has posted rapid revenue growth, expanding profit margins, and consistently outperformed Wall Street expectations. Their visionary leadership team continues to execute on ambitious goals, driving innovation and shareholder value. The AI accelerator market is projected to explode in the coming years, with demand for specialized chips skyrocketing as AI adoption accelerates. Even capturing a modest share of this market could translate into massive upside for AMD, given the sheer scale of the opportunity. In fact, demand for AI chips is so intense that major cloud providers and hyperscalers are turning to AMD as a crucial second source. This not only de-risks their supply chains, but also ensures healthy competition and innovation in the market. AMD isn't stopping at the data center. They're bringing AI to the personal computing space with their Ryzen AI processors, which are designed to make AI a core feature in everyday laptops and desktops. This move is expected to drive the next major upgrade cycle, as consumers and businesses alike seek out devices with built-in AI capabilities. AMD's strategy is clear. Embed AI across the entire product stack, from consumer devices to enterprise infrastructure. By making AI accessible and essential at every level, AMD is positioning itself as a foundational player in the AI-driven future of technology. While AMD's stock price has already seen significant gains, the company's forward growth potential remains enormous. As AI adoption continues to accelerate across industries, AMD stands to benefit from multiple growth drivers and expanding markets. AMD's market cap sits at roughly $348.79 billion, and in 2024 it posted earnings per share of 1.92. Its P/E ratio is quite steep, 111.58, reflecting high growth expectations from investors. That same year, AMD generated around $25.78 billion in revenue and produced a net income of $1.64 billion. These figures underscore how AMD is operating as a growth-oriented player in the market, with premium valuation built around its potential and product roadmap. Investing in AMD is more than just a bet on a single company. It's a bet on the explosive growth of AI, the evolution of a fiercely competitive market, and the proven ability of a leadership team that has already defied the odds. AMD's open-source approach and broad, innovative product portfolio set them apart from competitors like NVIDIA, giving them a unique edge as the industry evolves. No longer just a follower, AMD is now setting the pace in key technology sectors, shaping the future of computing and AI. With TSMC as their manufacturing partner, AMD combines world-class chip fabrication with dynamic innovation, giving investors exposure to some of the fastest-growing markets in tech and AI. For any serious tech investor, AMD is a must-watch stock, one that offers both resilience and explosive potential as the AI revolution unfolds. Now let's turn our attention to the company that's connecting all these innovations together. Finally, let's talk about the company that connects the entire AI ecosystem, Broadcom, ticker aVGO. While some companies are known for their chips or software, Broadcom is the silent force that makes it all possible, operating behind the scenes to ensure the world's most advanced technologies can actually communicate and function at scale. Broadcom is the backbone of modern data centers, making high-speed networking possible for AI workloads. Every time data zips between servers, GPUs, and storage, there's a good chance Broadcom's technology is making that happen, enabling the lightning-fast connections that AI models demand. Their networking hardware, switches, routers, and processors, enables thousands of GPUs to work together efficiently. These components are the nervous system of the AI revolution, allowing massive clusters to share information in real time, which is essential for training and running today's most complex models. Without Broadcom's technology, large-scale AI clusters would grind to a halt. Imagine a data center filled with the world's fastest chips but unable to communicate. Broadcom prevents that bottleneck, keeping the digital world humming. Their Tomahawk Ethernet switches are the gold standard for AI and machine learning networks, ensuring massive bandwidth and low latency. These switches are specifically engineered to handle the enormous data flows that AI workloads generate, and they're trusted by the biggest names in tech. As AI infrastructure spending surges, Broadcom's networking products are in unprecedented demand. The more companies invest in AI, the more they need Broadcom solutions to keep their data centers running at peak performance. They're also a leader in custom silicon, partnering with giants like Google and Meta to design chips tailored for AI workloads. These collaborations allow Broadcom to stay at the cutting edge, creating bespoke solutions that give their partners a competitive edge in the AI arms race. This embeds Broadcom deeply in customers' long-term roadmaps, creating sticky, predictable revenue. Once a company integrates Broadcom's technology, switching to a competitor is costly and complex, locking in relationships for years to come. The VMware acquisition makes Broadcom a major player in enterprise software, allowing them to offer complete infrastructure solutions for private AI clouds. Now Broadcom can provide not just the hardware, but also the virtualization and management tools that enterprises need to build secure, scalable AI environments. CEO Hock Tan's disciplined leadership drives profitability and successful integrations, making Broadcom a cash flow machine. His focus on operational excellence and strategic acquisitions has transformed Broadcom into one of the most efficient and profitable companies in the tech sector. They return significant cash to shareholders through a rapidly growing dividend and buybacks, perfect for dividend growth investors. Broadcom's commitment to rewarding shareholders sets it apart from many high-growth tech companies that reinvest all their profits. Their business model is resilient, with long-term contracts and entrenched relationships with major customers. This stability means Broadcom can weather economic storms better than most, providing a reliable foundation for your portfolio. Broadcom's near monopoly in high-end Ethernet switching gives them a powerful market position. Their dominance means they set the pace for innovation and pricing in this critical segment of the tech industry. As GPUs get faster, Broadcom's networking chips must keep pace, driving a constant upgrade cycle and ensuring future growth. Every leap in AI hardware performance creates new demand for even more advanced networking solutions, keeping Broadcom at the center of the action. The company is also investing heavily in next-generation technologies, like AI-optimized network fabrics and advanced chip packaging, to stay ahead of the curve. This forward-thinking approach ensures Broadcom remains indispensable as AI evolves. The combination of dominant networking hardware, custom silicon partnerships, and enterprise software makes Broadcom a uniquely diversified AI play. Few companies can match this breadth, giving Broadcom exposure to every layer of the AI stack. This company commands a market cap of approximately $1.877 trillion. Its earnings per share stand at 3.89, and its PE ratio is 102:20, again indicating that the market expects substantial growth and value creation. In 2024, Broadcom brought in about $51.57 billion in revenue and delivered a net income of $5.89 billion. That level of profitability and size positions Broadcom as a heavyweight in the chip and technology infrastructure world. You're not just betting on one part of AI. You're investing in the entire infrastructure build-out. From the physical cables to the software that orchestrates it all, Broadcom is involved at every step. Broadcom's wide moat and explosive AI-driven growth make it the perfect third leg of your AI portfolio. Its entrenched position and relentless innovation create a durable competitive advantage that's hard to disrupt. Don't overlook the plumbing. It's just as critical as the chips themselves. The unseen infrastructure is what allows the AI revolution to scale, and Broadcom is the master plumber of the digital age. Broadcom offers stability, income, and exposure to the essential infrastructure layer of the AI revolution. For investors, that means a rare blend of growth, resilience, and reliable returns. With TSMC, AMD, and Broadcom, you're covered across the entire AI value chain. These three companies form the backbone of the industry, from chip manufacturing to processing power to the networks that tie it all together. Let's wrap up with your next move. As you build your AI portfolio, consider how Broadcom's unique strengths can anchor your investments for the long term. There you have it, TSM, AMD, and Broadcom, the foundational pillars of the AI industry. Investing in these three gives you a diversified, powerful stake in the entire AI ecosystem. Taiwan Semiconductor emphasizes scale and stable earnings backed by massive manufacturing capabilities. AMD represents growth and high investor expectations, betting on innovation. Broadcom combines both scale and profitability while commanding a high valuation that reflects its diversified technology and infrastructure footprint. The AI revolution is a marathon, and these companies are built to win for the long run. Want to level up your investing? Check out my Value Stocks Investing Master course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community, details below. Which of these three AI stocks do you think has the most long-term potential? Drop your thoughts in the comments. Don't forget to like, subscribe, and stay tuned for more investing insights. Thanks for watching. I'll see you in the next one.